Alright guys, let's quickly revise better whatever we have learned in this chapter once. So material better, the very first thing that we did in this chapter guys was the importance of material control. If you want, you can turn the pages guys, go to the very first side in your notebook guys. Notebook may be given appropriate explanations that are required for understanding of the chapter. Notebooks better rahega beta. Material. So the very first thing beta that we did was the importance of material. I said for any manufacturing company beta, material is a significant component of the overall cost of the product. Because material is a significant part of the overall cost of the product as such guys, the price of material, the quality of the material will directly have an impact on the cost of the finished product and the quality of the finished product. Remember guys? Plus, that is why beta the first 2 points beta were in relation to the pricing of the product and the quality of the product. After that I said beta, if you do not have materials, sufficient quantities of materials available beta, there will be production stoppages. That is why we will have to ensure beta that you have sufficient quantities of raw material available as and when required. However, storing raw materials also will result in a higher amount of storage cost. There can also be losses that are arising during storage. So in order to reduce your carrying cost, you will have to ensure that you do not hold abnormally higher level of inventories. So do not stock less. If you stock less beta, there will be production stoppages. If you stock a higher quantity, you will end up incurring a higher carrying cost. You will also end up incurring higher storage losses. And then beta, if you have information, ready information available about the materials in your organizations, it will be better for decision making. So this is the importance of exercising control over materials. After that beta, I moved on to what are the different types. Controls over what guys? Control over material procurement procedure as such guys, control over consumption of material, control over storage of material. In your notes beta, we have written about material procurement procedure. At this point I told you that there are different departments in an organization. No one is getting up from their places now. So at this point I told you beta that there are different departments in an organization. There's engineering department, there is production department, purchase department, stores department, accounting department. Your engineering department beta is the department that is responsible for the design of the product. Obviously they will work in line with production department, sales department also to see whether the product that they're designing is commercially viable or not and whether it can be manufactured or not. Your engineering department will prepare something called as bill of material, BOM. A bill of material guys is a detailed list of materials that is required beta to manufacture a particular product. This will be used by your production department in planning the production, will be used by purchase department to know when should they be placing orders as such guys. It will be used by stores department also to check whether they have sufficient quantities available or not to manufacture the product, and by your accounts department beta to cross verify whether they're buying sufficient quantities of material or not. After that beta, we moved on to material requisition note. I said every time the production department needs material beta, they're going to raise a requisition. This requisition will be to stores department for issue of materials. This is also known as your stores requisition note. This will be used guys for the purpose of accounting. Now that you've done the entire chapter, we know to identify material cost of the end product, the most important document is material requisition note, because that will consist of the code guys of the product for which the material is used, code of the material that is being issued. After that beta, we did purchase requisition note. I said purchase requisition note beta is a requisition made by stores department to the purchase department for purchase of materials. In case you have a supplier fixed for that material, you directly place an order. In case you do not have a supplier fixed for that material beta, then you issue a RFP, request for proposal. This is basically beta asking all the suppliers guys who are willing to supply to submit their quotations. Once you finalize guys on a particular supplier as such beta, then you will release a purchase order. A PO is an actual order beta for purchase of materials with the supplier. After that beta, when the supplier is delivering the product to you, you will prepare goods received note, GRN as such guys. GRN beta will be at the time of receipt of material, issued to product, issued to purchase department as such guys, issued to stores department, issued to accounting department also. One copy they will retain. In case the materials are returned to the suppliers as such beta, then you prepare a material return note. Are we clear about this? This was all about guys your procurement procedure. After that beta, we moved on to valuation of material receipts. I said material is an asset beta like any other asset of the organization. That is why the basic valuation principle of material remains same. Whatever is the procurement price that you're incurring in relation to acquisition of material and all other expenses directly attributable to acquisition, provided the burden of expenditure falls on the organization, should be included in the cost of materials. Uske niche beta we did first discounts and subsidy. I said if it's in relation to procurement activity, trade discount, quantity discount, subsidies and incentives, all of them are in relation to procurement. That is why they are adjusted from invoice purchase price beta. If it is cash discount, it is nowhere related to procurement activity. Because it is nowhere related to procurement activity beta, what do you do with that? It is transferred to P&L account. Are we clear about that? Next beta was duties and taxes. Here I said beta that any duty for which you can claim a credit should not be included in cost. If you cannot claim credit, it should be included in cost. Road tax, toll tax, customs duty. By default, credit cannot be claimed. Because credit cannot be claimed as such beta, you're supposed to add it to the cost of purchases. On the other side beta, if you have GST, by default credit can be claimed. Because you can claim credit beta, it will not be included in cost. However, if you are a non-registered dealer, if you're not registered under GST and you are buying a product by paying GST, then obviously you cannot claim credit. Also, if you are buying from a composition dealer, you cannot claim credit. If you yourself are a composition dealer, you also cannot claim credit. The minute composition dealer comes into picture beta, the entire credit ka system breaks. There is no longer credit that can be passed on. Are we clear about this? Then beta we moved on to penalty and charges. I said any form of penalty that you pay is in the nature of abnormal loss. Because it is abnormal loss, it cannot be included in cost of materials. Yes or no guys? Demurrage charges here. It is penalty payable for delayed delivery. Either you are delivering it late or you are picking up late as such beta. That is the charges. Next beta other expenses. Insurance, commission, freight inwards. All of them, are they directly attributable to acquisition? Yes. That is why beta what do we do with it? Add it to the cost of acquisition. Cost of containers is, guys, I said there are two types of containers. We have returnable containers and non-returnable containers. Returnable containers, you should not include it because you will get back your money. Non-returnable containers, you should include it. But for returnable containers also beta, in one question, we paid a higher amount but we received a lower amount. I said the net difference will still be added to your cost. You remember that question? You paid 6,000 but you got only 4,000. Same figures nahi aayenge beta exam mein. The difference 2,000 rupees should be added to cost. Then beta shortage. I said if the shortage is on account of normal reasons, what do you do with it? Adjust it to the cost of purchases. If the shortage is on account of abnormal reasons, guys, you transfer it to. After that beta, I said there are different types of store records that you maintain. One is bin card, the other one is stock control card, the other one is stores ledger card. Bin card is the card that is placed on the container in which the materials are stored. It will have all the details of the materials, guys, except the value of material. Code of material, receipts, issues, balances, everything will be written on that bin card. Stock control card beta is also maintained by the storekeeper only, but it's a centralized register of all the materials. Because bin card beta will be on respective containers, I will still need a central register that has details of all the materials. That is called as your stock control card. Stores ledger card is maintained by accounts department, which will have all the details that you have on a bin card, including the value of material. Because the accounts department is also concerned about accounting for all of those transactions, and that is why value becomes important. Are we clear? Then beta we moved on to inventory control. There are 4 things under inventory control. By setting quantitative levels on the basis of relative classification, physical control and ratio analysis. First one beta was setting quantitative levels. This is where beta I said there is something called as lead time. Lead time is the time gap between you placing an order and you receiving an order. So under that beta, first reorder level. Reorder level is the level of inventory at which you should be placing a new order. The objective of computing reorder level beta is to ensure that during the time, lead time as such beta, you have sufficient raw material available to manufacture. That is why, guys, reorder level on the worst possible scenario, formula is maximum lead time into maximum consumption. But this might result in abnormally higher level of inventories. That is why we have learned another formula. What is that? Normal lead time into normal consumption plus safety stock. I repeat, it is maximum lead time into maximum consumption, or the other formula is normal lead time into normal consumption plus safety stock. That's the other formula for reorder level. After that beta, we moved on to the concept of reorder quantity. This is the quantity of material that you're supposed to order every time an order is placed. The three important things that you have to consider while determining what should be the quantity to be ordered beta is purchase price, ordering cost, carrying cost. Purchase price may depend on the quantity that you're ordering at once. Ordering cost is a fixed cost that you're incurring every time you place an order. I repeat, fixed cost per order irrespective of the order size. If the amount is being incurred on a per unit basis, it can never be included in ordering cost. It should be included in purchase. Anything incurred on a per unit basis, guys, will be included in purchase price. Anything that is incurred as a fixed amount irrespective of the order that you are placing, then it will come in ordering cost. Carrying cost is a cost that you will incur, guys, on storage of materials. Any cost that you're incurring as such beta on account of storage of materials will be carrying cost. This normally comprises of two parts. One is physical storage cost, the other one is investment blocked pay finance cost. Because you're storing materials, there'll be some amount of investment blocked and that will result in finance cost. So your objective beta is to minimize the sum total of all the three costs: purchase price, ordering cost, as well as carrying cost. Carrying cost is not incurred on total quantity purchased in a year. Carrying cost is incurred on average inventories that you hold. Unless otherwise given, this average inventory will be half of quantity ordered. EOQ, guys, is a policy which does not consider purchase price, which considers only ordering cost and carrying cost. I told you better, the point at which your ordering cost is equal to carrying cost is the point where the sum total of your ordering cost and carrying cost would be the least. This is where we derive the formula of EOQ beta, and I said EOQ is equal to root over 2AO by C. However, this may not be the most economical purchase level. This does not consider what beta? Purchase price. In case you have quantity discounts given in the question, you are actually supposed to compare total cost at different alternatives and then see what will be the most economical purchase level. Yes or no, kids? Yaad aaya? Whenever carrying cost is given in percentage, be careful. If the purchase price is changing, carrying cost per unit also will change. If carrying cost is given as a fixed amount, then absolutely no problem. Irrespective of your purchase price, carrying cost will remain same. So these were the set of questions, but almost first 20-25 questions were based on this concept only, comparing total cost under EOQ with other quantity discounts. Then beta we moved on to maximum level, minimum level. Maximum level is the level of inventory that you have in your organization after you receive a fresh order. So this will be your reorder level. From that we remove lead time consumption, but this lead time consumption is based on minimum basis. That is why you write minimum lead time into minimum consumption and you add ROQ. Average minimum level beta is the level of inventory that you have before you receive a order. However, for this beta we assume that your consumption during lead time is on average basis. That is why you write average lead time into average consumption. Average inventory level beta is minimum plus maximum by 2. This may not give us the most accurate answer. What is the other one? Minimum level plus half of ROQ. Remember, guys. Next beta we moved on to danger level. I said in case you miss placing an order at reorder level, you're supposed to place an order at danger level. And this will arise only if you have a prior agreement with your supplier for delivering material. Danger level will be equal to lead time for emergency purchases multiplied by normal consumption. Safety stock beta is buffer stock. Safety stock will arise only if you have reorder level, guys, based on normal lead time and normal consumption. And in case an organization has safety stock beta, then minimum level is always equal to safety stock. Jara aaram se page paltao bachcho. Next beta we moved on to the concept of stock out cost. Remember, I said, guys, in case you do not maintain a sufficient amount of buffer stock as such beta, then there can be a situation of stock out. In case there is a situation of stock out as such beta, we will end up either losing out on the entire sale or we may have to procure raw material at a higher cost at the last minute. So to determine what is the optimum level of safety stock, we have to compare two things. What is the carrying cost that you're incurring on safety stock? What is the carrying cost that you're incurring on safety stock? And what is the amount of stock out cost that you are incurring? These two things should be compared. Remember the question? We computed expected stock out units. Based on that, we computed what is the expected stock out cost. We compared the sum total of carrying cost on safety stock plus expected stock out cost. Whichever alternative resulted in the least possible answer, we determined that that should be the optimum level of safety stock to be maintained. Yes or no? Go back and check later beta. Then we moved on to just-in-time inventory system. I said manufacturing can be on a pull basis or a Push basis. Push basis beta is where you anticipate your demand and manufacture the product and then try to sell that inventory in the market. Pull system on the other side beta is undertaking manufacturing activity only on the basis of actual orders received. The objective of a pull system beta is to ensure that you do not incur any carrying cost, because you will not be holding any materials, you will not be holding any finished product. Carrying cost beta should be zero. That is the whole objective. Here I spoke about JIT procurement, JIT production. JIT procurement is buy raw materials only when required. JIT production is manufacture raw materials only when orders are received. So you manufacture only when they are received as such beta, and you also deliver it to the customer only when they need it. This is the whole concept of JIT, just in time. Then beta we moved on to inventory classification on the basis of relative, inventory control on the basis of relative classification. 4 things here: ABC, FSN category, VED and HML. First one, ABC analysis beta is based on Pareto rule. I said on the basis of relative value and volume, you divide inventories into 3 categories: category A, category B, category C. Category A beta is 70% in value, 10% in volume. Category B beta is 20% value, 20% volume. Category C is 10% value, 70% volume. Not necessary beta that you should stick to the exact percentages. Obviously the limits are modified in relevance to the question. These are just reference ke liye limits. You will place the highest amount of controls on category A. Reorder level fix karna guys, monitoring the inventory levels, ensuring that you do not hold a higher stock or a lower stock. Category B as such beta, you can place order once in every 2 months, once in every 3 months. You're not so much bothered as such beta, because the amount of investment required is relatively less. You keep reviewing the stocks periodically as such beta and place orders. Category C ke liye beta, place fixed order once in every 6 months, once in every 1 year, get done with it. You do not want to waste your time on exercising control on category C items. Maximum control should be only on category A. The next one beta that we did was FSN category: fast moving, slow moving and non-move. The objective is to reduce the movement of people also in the organization. See guys, we'll learn this in CA final also. There's something called as lean system. Lean system is reduce wastages. There cannot be any wastage in the organization. Even if a person is moving from location A to location B, it is considered as a waste in manufacturing activity if that movement can be avoided. If raw material is being moved from location A to location B, we consider that as waste. There is movement of time beta, people, resources are required, everything is considered as a wastages. I'm not kidding, there are consultants who help people in designing the organizations beta, factories and everything, so that the movement is reduced. Manufacturing units are U-shaped, so that a single person can handle 4 machines simultaneously. This is all for reducing wastages. This is reality beta. Manufacturing units are designed in such a way that you reduce all the wastage of resources. Anyways, coming back to this beta, fast moving items are the ones beta that are consumed almost on a daily basis. That is why where will you store them? Near to the store issue point, so that you do not keep moving as such beta every time someone is requesting for that material. Likewise, and also beta, you have to review their stocks periodically because they are consumed almost on a daily basis. Slow moving as such guys, relatively lower. Keep checking whether that inventory has become obsolete. If it has become obsolete as such beta, you will shift it to non-moving category. Dispose them off. Non-moving, please dispose it off. Anyways, it is not required. The next one beta is vital, essential, desirable. What are the keywords that I told you? For vital category beta, non-availability will result in production stoppage. For essential category beta, non-availability will result in loss of efficiency. You're manufacturing but the efficiency is less. Desirable beta, no impact on production or no impact on efficiency. HML category beta is the same as ABC analysis, except that the classification is based on cost per unit, not based on total cost. Then we moved on to the next one beta, inventory control using ratio analysis. 2 ratios, input output ratio and inventory turnover ratio. Input output ratio beta measures what is the standard quantity of raw material that is required to manufacture each unit of output. So you can compare what should have been the standard consumption of raw material for a particular output level with the actual consumption. Inventory turnover ratio guys measures how quickly is the how many times is the inventory getting replaced in a year. You can track inventory turnover ratios as such guys to know whether you're holding higher inventory levels or lower inventory levels. At this point, we also computed inventory holding period beta, which is 365 days divided by your inventory turnover ratio. Inventory turnover ratio ka formula beta is annual consumption of raw material divided by average stock of raw material. We moved on to inventory control through physical control beta last. The first one is two-bin system. Under two-bin system, guys, what do? Maintain two containers for storage of materials. One smaller container, one larger container. Smaller container is usually equal to ROL, or beta in few cases it can be minimum level. You keep consuming materials out of the larger container. As and when the larger container is exhausted, beta, you know that you will have to place a... Then beta we said preparation of budgets. If an organization prepares budgets, they know what is the quantity to be manufactured every month as such beta, and they will know what is the amount of raw material that is required. Accordingly beta, you will be able to plan your purchases. Then we did beta perpetual stock taking, that is stock verification. Under that I said beta there can be perpetual verification as such, guys, that is continuous stock verification beta, or periodic stock taking. Periodic stock taking beta is where you verify your actual inventory levels as such, guys, once every month, whatever is the periodicity, guys, it can be once every month, once every quarter. Continuous stock verification beta is few items will be physically verified on a daily basis. Alright, usually under perpetual inventory system, guys, you follow continuous stock verification. Are we clear about that? Then beta material issue procedure. I already told you guys what is material requisition note, what is material transfer note, what is material store debit note or a shop credit note. Okay. Material requisition note is obviously beta request made by purchase production department, guys, to your stores department for issue of materials. Material transfer note is used, guys, when materials are internally transferred between two different jobs or two different departments. Store debit note beta is where the materials are returned by production department to stores department. Are we clear about this? As far as accounting in stores ledger card is concerned, whenever you're returning materials to suppliers, it should compulsorily be accounted at the price at which it was originally purchased, irrespective of FIFO, LIFO, weighted average method. Does not matter which method are you following. You will have to account it at the price at which the material was purchased. Likewise, in case production department is returning that material to the stores department, it has to be accounted at the price at which the material was issued to the production department. If there's any internal transfers between two jobs or two production departments, it will not appear in your stores ledger card. In case you have normal loss of materials, you will write it under issues, reduce quantity and increase price per unit. In case you have abnormal loss, you will normally consider that as an issue. Just say how you are issuing materials to production departments, even an abnormal loss will be accounted in the same way. Are we clear, guys? Then beta we did the methods of inventory valuation. When you issue materials, what methods can you follow? Under cost price method, guys, I said you can follow specific price method, FIFO method, LIFO method, base stock method, average method, simple average and weighted average. Now, specific price method is followed when inventories are purchased, guys, for a specific order. FIFO method is followed when the prices are relatively stable. LIFO method is followed when the prices are on a continuous increase, so that the profitability reflects purchase consumption based on the latest prices. Then, guys, you follow average price method when there are wide fluctuations. Simple average price method is not followed because it is mathematically incorrect. Base stock method beta, you will have a certain level of base stock that is always maintained at original cost. For the balance issues, guys, you will still follow FIFO, LIFO, weighted average method, whatever is the other method that you are following. Iske baad mein beta we did methods based on market price, which is relevant for decision making. Remember, I said, guys, in case you have stocks of materials and that materials are required for a new order that you receive, the price that you're supposed to consider in the new order will depend on what were you going to do with that material. If that material as such beta is in regular use, you use replacement cost. If that material is not in use, then we use realizable value, because anyways you would have sold the material in the market. I gave the example of he holding books. The price of books increased to 150, or he doesn't need books and the price decreases to 70 rupees. Yaad hai nahi hai? Next beta we did notional price method. Under that we have standard cost, inflated price and reuse price. Standard price is followed when an organization follows standard costing. Inflated price matlab whenever there's a normal loss, we have to increase the price of the remaining units. Reuse price method beta is in case you have defectives, they should not be valued at normal price, they will be valued at a little lower price. Valuation of materials returned to vendor and all of that already did, guys. Valuation of material returned to stores, this done. Types of material losses. I have better here. There are 4 types of material losses. We have wastages, we have scrap, spoilage and defectives. Wastage is the loss that is arising during the process beta, and usually it is not identifiable and has no value. Scrap is also arising out of the manufacturing process but is identifiable and will have a value. the value of which is adjusted from that overall cost incurred. Spoilage and defectives, beta, defectives can still be sold in the market as such, guys. Either you rework them or you sell them as substandard products. Spoilage as such, guys, cannot be rectified, cannot be used as a normal product. You will have to dispose it off as such, beta, literally as scrap. Matlab, it cannot be sold in as a product as such, beta. It cannot be used for its intended purpose. That is why it will be disposed of as scrap. That is spoilage. We also did obsolescence, beta. Here obsolescence is loss arising when a material becomes obsolete. This will arise either if you have changed the production technology as such, guys, or you stop manufacturing that product altogether, or you have shifted to another material which is a better substitute available for that material. Are we clear, guys? So any kind of material losses, beta, other than obsolescence. Obsolescence is always considered as abnormal and will be transferred to P&L account. For the other 4 material losses, any abnormal loss as such, guys, will always be adjusted to the cost of remaining good units. Any kind of abnormal loss as such, guys, will be transferred to. Are we clear about this? That's the end of this also, guys. Chalo beta, that's the end of the session. See you guys later. You have a break. Alright, guys, give me your notes from the beta. Starting ninche, correct. The very first thing, beta, that I told you in this chapter, beta, is what are all the components that are included in your employee cost. I said employee cost will include your basic wages, it will include dearness allowance, beta, housing rent allowance, overtime payments, contribution to PF and other retirement funds, or any other allowance. Does not matter, guys, in what form are you giving benefits to your employees. As long as an organization is incurring expenditure in relation to an employee, it will form part of employee cost. If the employee is directly involved in manufacturing activity, you will classify his wages as direct employee cost. Otherwise, it will come as indirect employee cost. The segregation comes only under manufacturing cost. Under all the other activities, selling and distribution, office and administration, all your expenses incurred are always indirect. So when I say, guys, directly involved, we are referring to the worker who's engaged in manufacturing activity. Only then as such, beta, it will be direct cost. Otherwise, it will not be a direct cost. We spoke about the different departments as such, guys, that are involved in exercising control over your total employee cost. When I say exercising control over total employee cost, we will have to ensure, beta, that you do not unnecessarily incur expenditure. HR department ka kaam kya rahega, beta? First department, based on the requisitions that you receive from different departments, their job as such, beta, is to fire the right kind of people. Fire nahi, beta, hire. Oh my god. Their job, guys, is to hire the right kind of people, guys, for the jobs, train them for the job. Okay, beta. The next department, beta, was engineering and work study department. They are the ones who are responsible for the designing of the product. That is why they are going to give the basic training as such, beta, to the employees for performing the manufacturing task. Then, beta, we have timekeeping department. We have to ensure that the employees reach the organization at the right time as such, beta. So timekeeping department ka kaam is to record the in time and the out time of the employees. Payroll department, guys, based on the number of days that the employees have worked in the organization, based on their entry time and exit time, they will calculate what is the amount of total wages that are payable to the employees. Accounting department account karega. Yes or no, guys? Allocation of wages and everything. Thereafter, as such, beta, before talking about other things, jane do. Ye attendance and payroll procedure mein, beta, I said there is something called as timekeeping and there is something called as time booking. What do you understand by timekeeping, guys? Timekeeping is only recording the attendance of the employees. Time booking, on the other hand, as such, beta, is maintaining a record of the time that is spent by an employee, guys, on different jobs, so that you use that record, beta, for the purpose of allocating the wages of an employee to different products, different jobs. So timekeeping mein, beta, I said there are multiple methods. We have manual methods, we have automated methods. Under manual methods, I said there is register method. What is register method? Make someone sit at the entry gate as such, beta. Whenever an employee is entering the organization, record their in time. Whenever an employee is leaving the organization, record their out time. Metal disk as such, beta. Token method is that you will give a disk to each employee with a unique code. As soon as the employee is entering the organization, he will leave it at the entrance, beta. Based on the tokens received, you will record who all has, basically are present in the organization. Automated methods mein, beta, we have punch card system. I said punch card, beta, is basically a card given to the employee that will have the details of the employee, guys. Whenever they're entering the organization, they're going to swipe their card as such, beta. And then biometric system, guys, is a characteristic of the employee beta, you use their thumbprint as such guys, or some other fingerprint as such guys, or their retina scan jo bhi hai beta, and that will be used for the purpose of recording the in time and the out time of the employees. Time booking ke liye beta, I said you may have time, there are two time sheets as such beta that you will maintain. One is in respect of each employee, the other one is in respect of each job. Each job ka time sheet will help us in arriving at the total employee cost of the job. Time sheet of each employee beta will know what is the time that should be apportioned or allocated to different jobs. Whether an employee was sitting idle, if yes, for how many hours was he idle, is it avoidable or unavoidable? Yaad hai nahi hai? Next beta, we did computation of effective wage rate per hour. For this purpose, I said there's something called as normal idle time and abnormal idle time. Normal idle time ka treatment kya hai beta? It will always be adjusted to the cost of the remaining number of hours. So if an employee is in the organization, say for about 48 hours, out of 48 hours, if there's a normal idle time of 4 hours, then whatever are the total wages that we are paying to the employee should be absorbed based on how many hours? 44 hours. Out of that, if there's any abnormal idle time and such, that will be separately transferred to P&L account. The first 3-4 questions that we did, but question number 20, 21, 22, were all based on effective wage rate per hour only. Remember that? Employee ka meal break, will that be normal idle time or abnormal idle time? Normal idle time. Leave with pay, normal idle time or abnormal idle time? Normal idle time. If there's a power cut in the organization, normal or abnormal? Abnormal idle time. You're still paying to the employee better, but then there is no work that is being performed. Yes or no? इसके बाद में बेटा, after computation of effective wage rate per hour, I also told you guys, once you're computing the total wages of an employee, that is cost to the organization, as far as contribution to PF is considered and contribution to ESI is considered, will you take both employers contribution and employees contribution, or only employers? Only employers contribution. That is the amount as such beta that the organization is incurring. Employees contribution should not be included unless otherwise given. Contribution to PF and ESI, will it be only on basic wages or both basic wages and DA? Basic wages and DA. After that beta, we moved on to the different types of wage systems. I said wages can be paid either on the basis of number of units manufactured or on the basis of the number of hours worked. If it is on the basis of number of hours worked beta, you call them as time wages or day wages or guaranteed wages, wherein you write total wages as time taken into rate per hour. If it is on the basis of number of units manufactured guys, you will write total wages as number of units manufactured multiplied by rate per unit. If rate per unit is not given in the question guys, how will you compute rate per unit? Always computed on the basis of time allowed and wage rate per hour. For example, if the wage rate is 15 rupees per hour and you are given 2 hours to manufacture each unit, it indirectly means that the rate per unit is 2 hours multiplied by 15 rupees. How much is that? 30 rupees per unit. This is if rate per unit is not given. Next beta, we did incentive systems. I said incentive systems guys can be, our syllabus may we only have incentive systems beta that are based on time. Based on time, we have Halsey scheme guys and Rowan scheme. Both of them guys give incentive on the percentage of time saved. Under Halsey scheme beta, the percentage of bonus to be given to the employees, how much? Unless otherwise given beta, it will be 50% of the total time saved. Under Rowan scheme guys, the percentage of bonus to be given to the employee beta will be the proportion of time taken to time allowed. So this basic wages beta will remain same under both the schemes, T into R. Under Halsey scheme, you're giving them 50% of time saved into rate per hour. Under Rowan scheme beta, it is T by S multiplied by S minus T into rate per hour. Once you get total wages, how will you compute effective wage rate per hour? Total wages divided by the number of hours worked will give us effective wage rate per hour. Almost all the questions beta, first 5-6 questions had reference to effective wage rate per hour. They asked us to maintain the effective wage rate per hour equal, then we computed what should be the time taken. Yaad hai nahi hai? Now, when will both the schemes beta result in the same amount of wages? When time taken is exactly 50% of time allowed, both the schemes will result in the same amount of wages. Yes or no kids? I gave a detailed example as such beta wherein we showed this. If time taken is less than 50% of time allowed, Halsey scheme will result in a higher amount of wage. If time taken is more than 50% of time allowed, then Rowan scheme will result in a higher amount of wages. Clear guys? After doing this beta, Halsey scheme and Rowan scheme, we moved on to which concept guys? मेरे को ही नहीं मालूम है बेटा. हाँ बेटा, employee efficiency అయిపోయిందా? ఎక్కడో వెళ్ళిపోయినా నేను. We moved on to the concept of employee efficiency guys. I said to measure the efficiency or productivity of an employee as such better, you should know what is the total output that is manufactured by an employee. For that, what is the time that he has actually taken and what is the time that he should have taken. So efficiency ratio in terms of time beta is standard time divided by actual time. In terms of output guys, it will be actual output divided by standard output. That will tell us what is the efficiency of an employee. What is the advantage of measuring efficiency? Exercise over employee cost as such beta, you will know what is the amount of incentive that is given, that is to be given to the employees. You will also know what is the standard, matlab fixation of standard time over a longer period. Are we clear? Next beta, after measuring employee efficiency, और क्या करे थे beta? I explained about the concept of PV ratio. PV ratio is not actually based on employee cost as such beta. PV ratio is based on marginal costing. It is the proportion of contribution in the overall revenue of the firm. How will you compute contribution guys? Sales minus variable cost. So if PV ratio is 30%, that means for every 100 rupees of revenue, contribution will be 30 rupees. Are we clear guys? Loss of contribution itself will be loss of profit. We did this beta under employee turnover. What is employee turnover guys? It measures the number of employees who are joining the organization and leaving the organization. So employee turnover ke liye beta, I said there are multiple methods guys. Ek second. The very first one beta is separation method. Under separation method guys, we take the total number of separations and divide it by average number of employees. Are we clear guys? Under replacement method, we'll only take new joinees on account of the vacancies that are created. That is why replacement method mein beta, your employee turnover rate will be equal to your number of replacements divided by average number of employees. If you have new joinees both on account of replacement as well as on account of expansion, then we have accession rate. Accession rate will take all new joinees divided by average number of employees. Flux method is the overall employee turnover rate. If you do not have accession ka data given, then it is separation plus replacement. If accession data is given, it will be separation plus accession. Also, if at all the period under consideration guys is less than 1 year, then you will also have to compute equivalent annual employee turnover rate. That will be beta into 12 divided by whatever is the period given, or into 365 divided by the period given. Yes or no guys? If they give us the information in days, I said you will have to compute it in days only. If they give it in months, you will have to compute it in months or in quarters, depending on the data given in the question. Are we clear guys? After employee turnover beta, what was the next thing? We moved on to the treatment of overtime premium. I said there's nothing wrong with overtime guys, but the only problem is if at all you do not plan properly, instead of incurring normal wages, you will end up incurring overtime wages. The additional payment that is coming on account of overtime is called as your overtime premium. The treatment of that overtime premium will depend on why did overtime occur. If overtime is on account of a policy of the organization because you have labor scarcity or machineries are not available, then what will you do with overtime premium? It will be included guys in the computation of effective wage rate per hour. Are we clear beta? Once it is included in the computation of effective wage rate per hour guys, it will be allocated to all the products that were manufactured during the year. If overtime premium is on account of defective planning of the organization, then the entire overtime premium will be transferred to P&L account. There will be nothing included in the cost of the jobs. Only basic wages as such beta will be included in the cost of the jobs. And if it is at the request of the customer guys, then the entire amount of overtime premium will be allocated to that customer's account. Yes or no guys? That was the last thing that we did. And after that beta, we directly moved on to the concept of direct expenses. Are we clear guys? Yes or no? Very good. Alright guys. So the first thing that I told you beta is that direct expenses can be allocated to the end product. You do not need any basis for apportionment of direct expenses guys. To identify direct material cost with the end product, you will have material requisition notes guys. Material requisition note will tell us which material is being used for which product. For the purpose of direct labor guys, again I told you we will have job card, we will have time sheet maintained for each employee that will tell us how much time has been allocated as such beta by employee for different jobs, and you will be able to identify the amount of direct wages in respect of these products manufactured. How to compute effective wage? Timesheet will only tell us how many hours have been spent by an employee guys on a specific job. We still have to compute effective wage rate per hour. Effective wage rate per hour we have learned in the chapter of wages. You take all the expenses in relation to employee beta divided by the normal available hours. That will tell us productive effective wage rate per hour. Same way beta materials chapter I told you how to arrive at cost per unit. At the time of receipt of material, purchases of material guys, you include all the expenses that are directly related to the acquisition of the material. Once you arrive at cost per unit, you will have to follow either FIFO method or weighted average method guys in order to arrive at the pricing of materials issued. Remember this. Direct expenses के लिए बेटा you do not need any basis again. मतलब other direct expenses, direct material, direct wages छोड़ के if you have other direct expenses like royalty paid for production guys, won't you be directly able to identify that for the specific product? Product specific design अगर है, product specific software अगर है, what will you do बेटा? Directly included in the cost of that product. What we have learned in this chapter beta was majorly how do we treat factory overheads, manufacturing overheads. For the purpose of manufacturing overheads guys, I said under traditional method, whatever we have learned here was traditional method. Instead of directly establishing a relation between the expenditure incurred and the end product, we first transfer all the expenses to different departments. Departmentalization bolte isko. The wording is not important, but then instead of directly transferring overheads to the end product, we are transferring overheads to different departments. For this purpose, I told you we divide our departments into production departments and service departments. Production departments are directly engaged in manufacturing activities. Service departments which are only providing support functions to your manufacturing departments. What will be the examples of service departments? Maintenance is an example beta of service department. Stores is an example of service department. Accounts department, agar accounting department at the factory related beta, it should be not all the other overheads. Yes, accounting as such beta at the factory level will also be a support department. Payroll department as such beta, HR department also will be a support department. So what you do beta is first transfer expenses to all these production departments and service departments. This step I told you is called as your primary distribution of overheads, which in turn comprises of allocation and apportionment. Allocation is the word used where expenses directly relate to a specific department. Apportionment is where you are incurring overheads beta for two or more departments. If you have apportionment as such beta, you also have to transfer those expenses. If you recall beta, I said there will be allocation basis. जैसे अगर factory rent है, how are you going to apportion that as such beta to different departments? On the basis of floor area. ठीक है? Anything other than that beta, जैसे lighting and heating अगर है, lighting and heating guys, in most of the questions that we did, they gave us light points. But if light points are not given guys, I told you that you will apportion this to all the departments using floor area only, assuming that there is uniform lighting in the entire department. Air conditioning expenditure also you will do it on the basis of floor area. Centralized agar AC है beta, it is on the basis of floor area. Centralized air conditioning नहीं है, then you know beta how much is the amount of utilization for each department. Anything guys in relation to labor which is based on the amount of wages will be allocated as a percentage of wages. Anything that are common to on the employees beta irrespective of their pay scale will be allocated on the basis of number of workers. So if there's any welfare activity for the employees beta, you're going to allocate that on the basis of number of workers. But if there's a perquisite which is based on their wages, you're giving them some allowances, that will be on the basis of wages. Most important bit I told you is if you have other expenses, sundry expenses, miscellaneous expenses, you are going to apportion this to different departments guys, either on the basis of machine hours or labor hours. If and only if you do not have details of machine hours or labor hours for all the departments, then you're going to do it on the basis of direct wages. There was one question in which we did it on the basis of direct wages. There was another question in which we did it on the basis of machine hours or labor hours. Also guys, if there is electricity expenditure as such guys, I told you that you're going to allocate this to different departments as such guys on the basis of horsepower multiplied by machine hours. दोनों रहना चाहिए. If they do not give us details of horsepower, you will only take machine hours. If they do not give us details of machine hours, you will take only horsepower. इसके अलावा if there are rates and taxes, what did I tell you guys? Rates and taxes. Municipal taxes, and because it is municipal taxes such guys, it should be allocated on the basis of floor area. Exactly the way as such beta you allocate your factory rent, you will have to allocate this rates and taxes also. In another question as such beta we came across the word trade license fees. Trade license fees, that question beta I told you to remember that you're going to allocate this on the basis of investment. So once you've allocated all the overheads to different production and service departments, guys, you are done with your primary distribution of overheads. Then comes secondary distribution of overhead, also known as reapportionment. Under secondary distribution, guys, you transfer back all the overheads from service departments to production departments. The objective of transferring back overheads beta is because you will not be able to establish a relation between service department and the end product. You will be able to establish a relation between production department and production department and the end product. So you transfer service departments to production departments. From production departments, you will absorb overheads. ये transfer back करने के लिए बेटा there are multiple methods, primarily 3 methods. One is direct method, non-reciprocal method and reciprocal method. Direct method is used where there is no service rendered by service departments to the other service departments. Service departments are rendering service only to production departments. That is where you use your direct method. Even if there is some service rendered by one service department to another service department and the question says that you will have to use direct method, then you cannot question the question. Yeah, there was one question beta where there was mutual service also, but in spite of that question mein first bit mein wo bola ki use direct method. You will have to use direct method to apportion the overheads. You'll have to ignore the service that is being rendered by one service department to the other service departments. Non-reciprocal method beta is where one service department renders service to the other while the other service department does not render service to the first service department, also known as step method. The order in which you reapportion service department cost to production department beta becomes relevant only under step method. You will have to reapportion that service department first, that is rendering service to the other service departments. Keep going in that step as well beta. That is why the name is step method. At each step, one service department keeps getting eliminated. After that beta we did reciprocal, where there is reciprocal service rendered by service departments. Iske niche again there were 3 methods beta. One was repeated redistribution, the other one beta was simultaneous equation, the third one was trial and error method. Under repeated if there is reciprocal method, is going to give you only 2 service departments. It will not give you more than 2 service departments. Under repeated redistribution, guys, you keep reapportioning the overheads as such, guys, till you reach a very small amount. Usually beta we perform 3 full cycles. 3 full cycles beta will be service department 1, service department 2. दोनों का reapportionment is 1 cycle. You repeat that process 3 times. But if the amounts are very less as such, guys, you might end up the answer in 2 steps only. Last step mein beta, whenever you're reapportioning service department cost, you'll have to apportion only to production departments. Please do not multiply by percentage, divide it in the ratio so that you end up allocating the entire amount. Yes or no, guys? जैसे यहाँ पे बेटा अपना repeated redistribution में we perform 3 steps. Though the ratio was 45%, 35%. If you see in the last step, we have allocated that in the ratio of 45-35. We did not multiply into 45% and 35%. Simultaneous equations and trial and error method are the same as repeated redistribution method, guys. It is just that the method information is presented in a different way. Under simultaneous equation, we form 2 equations. The equations beta will be standalone expenditure of a service department plus what are we receiving from the other service department. It is not about what are you rendering to the other service department. जैसे यहाँ पे बेटा कहाँ गया रही है? हाँ. In this question, guys, service department 1, guys, is rendering 10% service to service department 2, whereas service department 2 is rendering 20% service to service department 1. So when you're forming an equation for service department 1, you will take the standalone cost of service department 1 plus 20% of what you are receiving from SD2. Likewise, beta, when you're forming an equation for SD2, you will take the standalone cost of SD2 plus 10% of what you're receiving from SD1. Do not go wrong in this. Once you solve these equations, beta, you will arrive at an inflated figure. Uske baad mein you have to directly multiply, guys, the amount of service that they are rendering. Please do not divide in the ratio. जो भी inflated figure आएगा SD1 का, you'll directly write into 60% and into 30%. Whatever inflated figure that you get for SD2 without meditation, you will write into 45% and into 35%. The next method beta is, can we all sit right for a minute, guys? Is it okay? The next method beta is trial and error method. Under trial and error method, guys, again a copy of repeated redistribution method, but instead of showing all of those steps, we only show the apportionment to the service departments. Whatever was supposed to be allocated to the production departments beta, we allocated at once in the end. Same like simultaneous equation. Are we clear? This is about your repeated reciprocal method beta. After this, guys, moving on to the next point, we have learned about absorption of overheads. After we have done repeated redistribution, sorry, all the secondary distribution of overheads, there is absorption of overheads. Absorption में क्या पढ़ाया था बेटा मैं? First thing beta is to understand that absorption rate is always computed on the basis of budgeted data and not on the basis of actual data. Today organizations use actual rate as such ways, but then they determine selling price based on, rough estimate of cost. Determining overheads based on budgeted data is basically predetermined data, arriving at, guys, on the basis of your expected activity for the year. So this is why beta I also told you that they can be under recovery or over recovery of overheads. After that, I told you beta that you can either have a blanket rate or you can have departmental rate. Blanket rate beta is wherein you have one single rate for all the departments collectively. Departmental rate beta is wherein you have different rates for different departments. What is more appropriate, blanket rate or departmental rate? Departmental rate. Then beta we've also learned about different bases of reapportion, different bases of absorption. You can absorb it on the basis of machine hours or labor hours, as a percentage of direct material, as a percentage of direct wages, or as a percentage of prime cost. What is most appropriate? Machine hours or labor hours. If a department is machine intensive, you will do it on the basis of machine hours. If a department is labor intensive, you will do it on the basis of labor hours. So if they ask for your suggestion, you should always say departmental rates are better, and that also on the basis of machine hours or labor hours. Once you arrive at the amount of overhead absorption rate, how will you arrive at the amount of overheads absorbed? Whatever is your absorption rate, that multiplied by actual activity. For one job, if you're taking 100 hours multiplied by absorption rate. If you're taking 200 hours, you'll write 200 hours multiplied by absorption rate. Are we clear? Iske alawa beta, one more point that I forgot. I said the segregation of fixed expenses and variable expenses is not relevant when you're performing reapportionment of overheads. But when you're performing primary distribution of overheads beta, fixed expenses should be allocated on the basis of normal capacities, allocated capacities. Variable expenditure should be allocated on the basis of actual utilization. There were two questions in which we came across this point. Power cost. There was a generator that was generating power as such beta. We had to allocate the cost of that power to all the departments. I told you fixed cost should be done on the basis of rated capacity, and variable cost on the rated matlab whatever is the allocated capacity, and variable cost on the basis of actual utilization. Are we clear about this? So once we are done with absorption of overheads as such beta, I moved on to the concept of under recovery or over recovery of overheads. What did we learn, guys, there? First, how do we compute the amount of under recovery or over recovery of overheads? Overheads absorbed minus actual overheads incurred will is the amount of under recovery or over recovery of overheads. Okay? If the answer is negative, it is under recovery. If the answer is positive, it is over recovery. The accounting treatment of under recovery or over recovery, guys, the first method that we have learned is that this under recovery or over recovery will get transferred to profit and loss account. Second method beta is to carry forward that to the next year and absorb it with the amount of overheads of the next year. Third method beta is to analyze the reasons. If it is on account of defective planning, you transfer that to profit and loss account. If it is on account of normal cost increase or decrease, which was not within the control of the organization, you are going to use an additional recovery rate called as supplementary rate. Supplementary rate beta will be the amount of overheads unabsorbed divided by the effective units manufactured during the year. ये जब तुम लोग equivalent units manufactured during the year लाओगे, if there is work in progress, you're supposed to convert them into equivalent number of completed units by multiplying that by degree of completion. Once you get that, you will transfer the amount to cost of sales account, to finished goods account, and to work in progress account. If they ask us profit implication, you're always supposed to compare method 1 and method 3. To the extent the amount gets transferred to finished goods account and work in progress account, the profits will be higher under method 3. Because whatever you're transferring to cost of sales also will ultimately get transferred to P&L account only. That was about under recovery or over recovery of overheads. After that beta, we also did the concept of comprehensive machine hour rate. Under comprehensive machine hour rate, guys, I said instead of arriving at a single recovery rate for the entire production department, what are we doing? We are dividing the entire production department into different machine centers, guys, and you will have a separate recovery rate as such, guys, for each machine center. Similar machines as such, guys, will have one absorption rate. While arriving at this machine hour rate, guys, I told you that you also normally include the wages of the operator who is handling the machine. जो भी operator है बेटा, उसके wages will get included in the amount of this. So For comprehensive machine hour rate, guys, all you have to do is take total expenses for the year beta of running the machine, divide that by the productive machine hours. Okay, productive machine hours will be total machine hours minus maintenance time. If the question talks about setup time and operation time, check if setup is productive or unproductive. Sir, कुछ भी नहीं दिया तो please assume setup is productive. कुछ भी नहीं दिया तो जहां पे भी दिया बेटा, he is clearly mentioned it. If he is asking us to compute rate beta for setup time and operation time, that means setup is productive. If they do not mention anything, then you assume it to be productive. If they give information, then follow that instruction. If they ask us, if they tell us beta that setup is unproductive, you deduct setup time also, arrive at the total productive hours available. Take total expenses divided by the number of productive hours. Power cost का क्या करोगे बेटा if nothing is given? If they do not give us anything beta, we assume that it is not incurred during setup time. It will be incurred only during operation time as far as power cost is concerned. Are we clear? इसके अलावा बेटा questions were normal for machine hour rate. The first 3-4 questions that we did, it was very simple. Just take total expense, divide by the total number of machine hours. Only if there is setup and operation time as such beta, you should know that whether you're supposed to include that time or not. Are we clear, guys? Then finally beta, we also did the concept of capacities. First one was rated capacity. What is rated capacity? The maximum capacity as claimed by the manufacturer or based on the specifications given as such, guys. But we do not target that. What we target is practical capacity, which considers all your normal losses. Normal capacity is what you have achieved or what you're going to achieve over a period of time. Actual capacity is actual utilization. There is idle capacity. Idle capacity will be the difference between what beta normal idle agar hai beta, it is installed capacity and normal capacity. Normal capacity and actual capacity as such, but the difference will be your abnormal idle capacity. Normal idle capacity is automatically included in the overhead recovery rate, guys. Abnormal idle capacity cost is transferred to P&L account. Are we clear? इसके अलावा बेटा ये chapter में there's also treatment of admin overheads, treatment of selling and distribution overheads. We're going to learn that later. But कुछ नहीं है बेटा. Selling and distribution overheads, traditional method, it is absorbed on the basis of COGS. मतलब there are 3 products for example. Product A has 20 lakh COGS, product B has 30 lakh COGS, product C has 10 lakh COGS. Your total selling and distribution overheads will directly divide in the ratio of COGS. Under activity based costing beta, we will see what is resulting in that expenditure and then allocate that expenditure to different products. So we will learn about this, guys, on a later date. Abhi ke liye nahi. Are we clear?